Hello and welcome to this short video where hopefully I'm going to demonstrate to you the value of Deposit Sense, the savings specialists, and AIMS Accountants for Business to work together to bring value to themselves, but also more importantly to the clients of AIMS Accountants for Business. Okay. So let's start with a little bit about Deposit Sense. We are a specialist cash management business that provides a proposition to partners to help them maximise the value of their clients' cash. We were founded in 2011 following the ashes of the banking crisis, where a lot of people were extremely concerned about the security of their cash and whether or not they were going to be losing any of it. So our basic proposition is, in maximising the value, you're getting the best interest rate returns and the best level of protection from the Financial Services Compensation Scheme, and both of those things are factors that clients actually don't fully understand when it comes to managing their deposits. So since we established the business, we've provided cash management analysis and maximum value to over £700 million. But importantly, and one thing that we stress to our partners is we don't handle any client money. No money comes through our business. The client owns all of the accounts in exactly the same way as if they were doing this themselves. It's a facilitated management approach where we provide clients with the best and most suitable solutions. Okay, so we believe that everybody should understand the value of their cash and know how to maximise its value, because if they don't, the banks and building societies take control. So we've developed the best way, and then we've built a system around it so that any entity, individuals, businesses, trustees can do this very quickly. All of the returns are guaranteed, and the FSCS protection is obviously guaranteed, but the most important part for me, and the best part for me, is it's totally transparent. People can be shown and businesses can be shown the value of their cash before they decide to engage. Okay, so why should we manage cash? Well, the banks and building societies control the market, and the market is dominated by the big four banks. Okay. However, if you were to choose your savings accounts based upon those important factors there, financial strength is really important, but also the product value is really important. And there is a general perception that the big four are the safest, and that's not necessarily true. We can demonstrate through the system that when you are fully informed, you don't choose the big four. There are other banks and building societies within the UK who can give you better value with absolutely the same or better levels of protection than the big four. However, they all behave the same way. Once they have your money, then they will manage your money and your relationship basically to get you the lowest returns possible, whereas we help people to get the highest returns possible. So the banks and building societies control your money. They motivate people to keep the money in variable rate accounts where they manage the rates of interest, and the dormant rate of interest at the moment is down as low as 0.01% per annum, which is a bit of a travesty when additional money and valuable accounts are available, particularly when the return's guaranteed, the capital's guaranteed, and everything's protected by the Financial Services Compensation Scheme. The other factor this year also is the personal savings allowance, which is a tax benefit brought into basic rate and higher rate taxpayers. We can prove that if you don't manage your money, you need as much as £1 million or more as a basic rate taxpayer to get the value of that personal savings allowance maximised, whereas if you are managing your money effectively, you can do it with a little bit more than £60,000. So there's massive value to be obtained, but also peace of mind by making sure that either the money is protected fully or it's with the banks and building societies that are the most capital preserved. Okay, and that's what we deliver within our service. Basic principles of effective cash management: get the best rates of interest and protect your money. And in doing so, if you want to get the best rates of interest, you must only keep the amount of money you need available within the next 12 months on instant access, because you can get better rates of interest by building a portfolio of deposits. And this is really where the secret of the management comes in. So with these four principles here, The client always has access to their money, bearing in mind that any solution is built around the client's requirements and clearly not anybody else's. So they always have access to money, and they are never more than 12 months away from a new tranche of money to top up anything that they're holding on their instant access account. So to maximize the value of cash, you only need to know two things. It's how much you've got and therefore how much you need available over the next 12 months, because from there you can build any portfolio. Now, individuals may need a different ratio of the amount of money on instant access compared to the fixed rate portfolio than a business, charity or anything else. The point is, it doesn't really matter. The principles are the same. The entity determines what numbers go into which category. So let's quickly try this out with our calculator. So now this is something that we provide to our partners, and we're very quickly, so any accountant in your business could go on here and very quickly at an annual review work out how much value somebody can get from their deposits. So let's say we've got 250,000. So bearing in mind that the Hampshire Trust Bank has done a survey, and they reckon that the average amount that a small business holds on deposit is £500,000. So let's just use 250. It seems a little bit high to me. What the amount is irrelevant. Maximising the value is the point. So we just put the numbers in. The system automatically tells us the split and then gives us the return. And then from there we fill in the contact form, and we can get ourselves a report. So within less than 30 seconds I have a report that comes up. So this is what would be available to your accountants, and we can open that report and we can see it's a branded report. But this report will go through how an individual should structure their deposits. Okay, quite a thorough report. How to manage cash, those are the four principles that I mentioned, and the interest rate return that we can see here. One of the most important factors within all of this is the level of FSCS protection, and of course a business has to qualify for that protection, so all of that is checked out and governed as well. Those are the 6 things you need to do to maximise the value. There's the criteria for determining whether or not the business is protected, and down here we talk about the fact that we only include UK-based banks and building societies in the portfolios, and the client owns all of the money, so on and so forth. There's the shape of the portfolio. We can see it's being split because we asked for 100% FSCS protection, and then on the next page it shows us how the portfolio is made up. So £125,000 in instant access and £125 in 1 year. Now this is a debranded report, so at this stage it isn't showing the details of the banks. This is an example report to show what they could get. We can set the system up to show fully branded or a debranded version up front. It really doesn't matter. But the point is to get the details of the banks and building societies, then there is a £25 charge for that report. Okay, so a fully detailed report there available to members. If they want the information, then it's just a case of clicking on the report here, entering the details, and then the fully branded report is provided. Further to that, if the clients would like access to a system, we have the notification of the price here, the cost of the system, and then this is made available to the client so that they can actually just sign up and they can get the system managed, or to help them to manage their cash, which is an ongoing process, an annual process. As I've explained, if they don't manage the cash, then the money will ultimately become dormant. Okay, so that's how it works. That's as easy as it can be. Let's have a look at the commercial value, okay, in total. So let's assume that AIMS Accountants for Business has 200 accountants, and each accountant produces 10 reports a year from their client base. Okay, so in total that provides £50,000 worth of income, which would be split 50-50. If 10% of these people then went on to access the system at an average cost of £10 per month, then we can see there's an extra £24,000 there, which would be split 50-50. So that's one end of the spectrum. The other end of the spectrum, You know, if the accountants really engaged and really understood and appreciated the value and produced 100 reports per annum, then on the same ratios, there's £740,000 there, which will be split 50-50 between Deposit Sense and AIMS Accountants for Business. Okay, so that's a quick summary, quick introduction. Hope you found it useful. Really look forward to the opportunity to discuss it in more detail. There's my contact details, and I hope to hear from you very soon. So thank you once again for taking the time to listen to this video.